Welcome back to AI Analysis 1. Don't forget to smash that like button, it really helps support the channel. Today, let's take a look at a unique opportunity, a high-risk, high-reward value stock, Stellantis. Stellantis is in trouble. Can it recover? Stellantis, the automotive giant behind Jeep, Ram, Dodge, Chrysler, Peugeot, and more, is facing one of its worst years ever. Profits have collapsed by 70%, revenue is down 17%, and a CEO shakeup has left the company scrambling. Is Stellantis headed for a turnaround or a total disaster? In this deep dive, we'll break down Stellantis' crisis, financial health, stock valuation, and what the future holds, including the impact of Trump's new tariffs and the search for a new CEO. Let's jump in. Stellantis' financial meltdown. In 2024, Stellantis suffered its biggest financial setback since its 2021 merger. Here's what happened. Revenue crashed to $170 billion, down 17% from 2023. Car shipments dropped 12% as the company struggled with weak demand and an aging product lineup. North America, once its biggest moneymaker, saw revenue plunge by nearly 50% in the first half of 2024. Net profit collapsed to $5.9 billion, a 70% decline, the lowest since the merger. Stellantis had been a cash-printing machine after merging Fiat Chrysler and PSA, but in 2024 the wheels came off. So, what went wrong? Let's break it down. Why Stellantis is struggling. The macro storm. High inflation plus high interest rates equals expensive car loans. Stellantis hiked prices 50% since 2019, way higher than inflation 23%, so obviously consumers pushed back. Auto demand stayed flat in 2024, but Stellantis underperformed badly compared to GM, Ford, and Toyota. Bloated inventory and weak sales? Too many unsold cars. Dealer lots were overflowing, forcing Stellantis to cut production and offer massive discounts. Jeep and Dodge sales tanked, leading to leadership shakeups. The company had excess inventory of over 80 days in North America, much higher than competitors. No hot new cars. Unlike Toyota and Ford, Stellantis failed to launch competitive new models. Where are the electric Jeeps and Rams? Their EV strategy is lagging behind rivals like Tesla and Hyundai. Meanwhile, Chinese EV makers are expanding into Stellantis' key market, which is a huge threat. So, with all these problems, is Stellantis financially stable or is it heading for a disaster? Is Stellantis at risk of bankruptcy? The good news, Stellantis isn't broke yet. $34 billion in cash reserves equals one of the strongest balance sheets in the industry. No net automotive debt, so surprisingly, it's not in immediate financial danger. But 2024 cash flow was negative, $6.5 billion free cash flow, a big problem if it continues. Credit rating downgraded, BBB negative outlook. So while Stellantis isn't facing bankruptcy now, it must fix its operations quickly or risk burning through its cash. But there's another major storm ahead, new tariffs. How new tariffs could crush Stellantis. In early 2025, President Trump announced 25% tariffs on cars made in Mexico and Canada, where Stellantis makes a ton of its U.S.-sold Jeeps, Rams, and Dodges. This is a huge problem. Why? Stellantis relies on Mexican and Canadian factories to keep costs down. A 25% price hike on vehicles like the Ram 1500 could make them unaffordable for buyers. Dealers are already panicking, warning that these tariffs could destroy sales. Industry analysts warn these tariffs could wipe out Stellantis' North American profits. The company is lobbying hard to get exemptions, but for now, this is another major financial hit they'll have to deal with. Can a new CEO save Stellantis from disaster? CEO shakeup. Will a new leader fix this mess? CEO Carlos Tavares was forced out in December 2024. Tavares led the company through its best years, but failed to address the U.S. crisis. U.S. dealers were furious about bad pricing decisions and weak product launches. Stellantis' board finally lost confidence and removed him. So who's in charge now? Stellantis is searching for a new CEO, expected to be announced by mid-2025. John Elkann, Ferrari's boss and Stellantis chairman, is leading the hunt. Top contenders: Antonio Filosa, North America chief, and outside candidates from Ford, VW, or Tesla. The new CEO must fix Stellantis' brand strategy. Does it really need 14 different brands? Some analysts believe cutting brands and focusing on profitable models is the only way to win. Will a strong new CEO turn things around? Investors are waiting to see. Stellantis stock, value trap, or hidden opportunity? With all this chaos, is Stellantis stock a bargain? STLA is down 40% from its peak. PE ratio equals 6x earnings, one of the lowest in the auto industry. Dividend yield equals 8 to 10%, great if sustainable. Price to sales ratio 0.2x, that's incredibly cheap. Some analysts say Stellantis stock is wildly undervalued, but only if it can recover. The bull case: deep value at the moment, trading like a company in distress, but still profitable. Cash rich, no major debt. A strong CEO and new model launches could revive the business. The bear case: Stellantis has no economic moat, too many brands, aging models, and weak EV strategy. New tariffs could kill profits in North America. If the turnaround fails, stock could go lower. Subscribe to AI Analysis 1 to stay up to date with the market. Smash that like button if you found value in this breakdown. See you in the next one.